Welcome to the Golden Nuggets of Real Estate Investing, a podcast dedicated to helping you achieve financial freedom through real estate. We'll be discussing the most important lessons, or better known as the Golden Nuggets of Real Estate Investing, entrepreneurship, and personal finance with new and experienced investors to help you get into real estate investing or scale up your portfolio. So make sure to tune in. What's going on, everyone? It's Ross Nadai, host of the Golden Nuggets podcast. Welcome to episode 2. I got an episode full of golden nuggets for you. Today, I'll be joined by my special guest, Ben Bergen, who's a real estate investor out of Sarnia. Ben has been investing for 2 years now with a portfolio of 14 doors and growing. He gets into the weeds of what wholesaling is, how to wholesale, and what strategy he has personally been using to find off-market deals in a competitive market and build his investment portfolio. He talks about the fundamentals of Sarnia market, how he has been funding his deals, joint ventureships, and the power of having a good network and tenant screening. With that being said, if you haven't already, please make sure you rate and review this podcast on Apple Podcast. If you're watching on YouTube, leave me a comment, like and subscribe, and hit that notification bell so that you can stay up to date on the most recent episodes. Please share this podcast across all social media to help as many people as possible. Your sharing means everything. Thank you so much. Please enjoy episode 2 with Ben Bergen. So welcome everybody to the Golden Nuggets of Real Estate Investing. Today I'm joined here by my guest, Ben Bergen, who is an investor in Sarnia. So we're going to talk all about real estate today, try to understand what led him into real estate investing and what are some of the challenges and successes and failures that he faced. So without further ado, go ahead, Ben. Why don't you tell us a little bit about yourself?
Like Ross said, Ben Bergen from Sarnia, Ontario. I've been investing for about 2 years now. This year, 2020, is when I really decided to put my boots to the ground and really start diving in really hard into real estate investing. And I've done quite well despite given the COVID-19 restrictions and whatnot. So it's been quite an exciting year for sure. And, looking forward to the future.
Yeah, absolutely. Yeah. So, Ben, if you don't mind sharing, you mentioned you've been investing for about 2 years. Like, what kind of led you to real estate in the first place?
There's a lot of things, really. There's just so many things. I think I was in my backyard one day, literally just sitting there looking around, trying to paint a picture for my life, 10 years from now, where do I want to be? Mm-hmm. I've got 3 daughters, right? So they all need to go to school. They need to be, that's expensive. There's things around my property I want to do. Like I'm always, looking to upgrade things and whatnot. So I was really just trying to paint a picture for my life, my 10-year goal, and just realize that my day-to-day job wasn't going to cut it. In order for me to make it work at my day job, I was going to have to work like 70 hours a week and, take that much time away from my family. So at the same time, my wife was starting to push me to start reading books, self-development, stuff like that. And, mindlessly scrolling through Instagram one day, there was an ad came up for a bunch of self-help books. So, and then Rich Dad, Poor Dad was right front center, purple book, yellow letters. And I said, well, you know what? I'm a poor dad and I want to be a rich dad. So, this book probably suits me and where I want to be. So I said to my wife, I said, okay, you want me to read a book and get me this book for Christmas? And so she did. And I think I didn't from the time I unwrapped the book, and I didn't put it down until I was done reading it. And then one of the biggest takeaways from that was, take action. So right around the same time I was done reading that book, Rich Dad, Poor Dad was actually coming to Sarnia just for a weekend course, right? Just a little warm-up course.
Right.
And so I went to that warm-up course, spent the weekend in there, and again, the biggest thing was take action, right? Take action. So from that point there, it's just sort of been crazy. And then the next thing was, I was talking to my wife about this and doing things, and she had been talking to a friend of hers, and her friend's like, well, if Ben wants to get into real estate, there's real estate coaches out there. And just so happened that there's a real estate coach from Sarnia, Ontario, named Corey McKinnon. So
Right.
I mean, like, how ironic is it that, here's a guy that I've never even heard of real estate coaches. Like, nobody, I think it's one of those things that, really became a big thing in the last 5 years or so.
Right.
And so I'm like, a real estate coach? Like, what's that? Right. So right. So anyways, I reached out to him, and yeah, I've been working with him, with Corey, for the last 2 years. So it's been great. And the growth I've seen from working with him as a coach, it's been great.
That's awesome. That's fantastic. Yeah. So that's the key takeaway from here is basically, like you said, you got to educate yourself.
Educate.
Right. So we do get that question quite a lot. Like, how do I get started? I think education is a big piece. So I'm glad that you got introduced to it through like a book, and then you took some action. You perhaps went to a conference, and then you realized, you know what, I need a little bit more help. And there's nothing wrong with that. You got to put yourself out there and hire a coach. Coaches are fantastic, and it helps you get a lot more ahead than you try to figure things by yourself.
Yeah. I think working with Corey, the biggest thing that I learned from him was being able to source out your own deals, finding those deals yourself. I haven't bought a single property other than the first property I bought, which was before I was working with Corey. Everything I bought since then has
Right.
been private deals. Just sourcing out my own leads and stuff like that. And it actually, to me, it's a little bit more fun doing it that way, because doing the on market stuff, you find the occasional good deal. As far as in Sarnia, it's a little bit different because everything in Sarnia seems to be exploding. It's hard to find a good deal in Sarnia. So finding those off market deals is just, to me, it's a little bit more fun, because you get to deal with the seller directly. You get to negotiate your own deal. You get to, it's a little bit more personal that way.
Mm-hmm.
I made a lot of good connections from sourcing my own deals. I bought two duplexes earlier this year, and they're from the same seller. And after we were all done with the transactions, and we closed on the properties and whatnot, and he started asking me questions, because I had used a joint venture partner to purchase these two duplexes. And he was asking me questions about this joint venture partner. I'm like, okay, yeah, this guy, he brings the money, I bring the deals, and and we split the profits 50-50. And he started scratching his head, and he's like, well, is there any chance I could partner up on a deal with you someday? I said, absolutely. So here he goes from being a seller to a potential JV partner.
Right.
So I was just like, what are the chances of a seller wanting to do that type of thing? Because I think that was his biggest thing, was he knew the benefits of purchasing investment properties, but he didn't like doing the work, right? He didn't like dealing with the tenants. He didn't like dealing with that stuff. And I think that's why he sold me these two properties. He was just tired of dealing with the issues all the time.
Yeah. So basically, he just wanted to be, the passive investor in this sense, instead of, kind of taking over the day-to-day activity like you were mentioning. So for a lot of folks that are unfamiliar, so joint ventureship is basically a partnership between two individuals or multiple individuals, let's just say. And in essence, it's like you can there's no perfect, I guess, formula for it, right? Some folks think, you have to go down to 50-50 and someone has to be the money partner. No, it's between you partners, and you can figure out if you want to bring even more folks in. And because, you and I both know, Ben, there's individuals that have, like apartment buildings, so like 150 units, so you can imagine there's multiple stakeholders involved. So it's all between you and the other individual. And one of the common things that we do here quite a lot is the vendor take back mortgage. Have you ever approached any of your sellers to maybe go with that as an option?
Yeah, that was actually with these two duplexes. That was actually one of the first questions I asked, right? Like, not one of the first, because I mean, there's sort of lead up to it, but
right.
That was one of the questions I did ask, because him being an investor himself, I figured, okay, this guy understands the game and whatnot, and how it would benefit him to actually become the bank, but at he didn't want to, because he already had that money. He was already had that money was going to use that money for something else already, so it didn't work for him at that time. I haven't yet came across a deal where I could implement a vendor take back. But I mean, I always ask the question because you just never know. If if you don't ask, the answer is always no. So I always ask to see if they'd be interested, and if it works out, perfect. If it doesn't, then you go to the next option. So.
Yeah, so basically, what for folks that are unfamiliar with that terminology, vendor take back is basically you finance through the seller themselves. So the seller, in essence, acts like the bank. They give you the loans in a sense. You pay them the monthly fee, right? And then you have your own terms. Some people do it 3 years, 2 years, whatever it may be. So basically, they're acting as a bank, giving you ownership, and you take over, and they get a monthly payment of the mortgage in a sense. So. Everybody's different. Like you said, there are some sellers that need the money immediately. Maybe they have other assets they want to purchase, or perhaps some of them don't know. Some of them simply think there's no other way, right? They don't see the benefit, or they don't know that there's a way where they can still cash flow in a sense, right? They're still getting some money coming in. So vendor take back is an absolutely a fantastic way. I still haven't done it myself, but like you said, I am asking those questions now more than ever to see if that's a possibility, because it helps me scale up. Then I don't have to exhaust all my funds, and then I can move on and get on multiple properties that way. So that's fantastic. So you mentioned the first one you bought off on MLS, but the other ones you kind of bought off market. So what kind of was the shift in your mindset? I mean, what made you decide, you know what, I'm not going to look at MLS anymore? Because one of the common things people always say is, oh, there's no deals at MLS, right? There are few. You just have to look very carefully, but absolutely the best way is you go get out there and get your own deals.
I think the biggest part of it was, just working with Corey, because, that's one of the things he basically taught right off the get-go was, MLS is good, but I mean, it's there to be able to source out your own deals. That was sort of where the mind shift came, was when I started working with Corey, not even realizing, buying private was an option, right? I've heard of people selling their houses privately and whatnot, but I mean, then when it comes to actually sourcing out your own investment properties, being able to negotiate your own deals is extremely beneficial for you and the seller. Basically you're cutting out that middleman. You're negotiating, your own terms. And I've dealt with agents in the past, real estate agents in the past, and you try to negotiate vendor takebacks with, so you say to the agent, okay, well, do you think the seller would be interested in a vendor takeback? Right. What's that? or do you think we could get vacant possession? And the real estate just like, you can't do that. And I'm like, yes, you can if you negotiate. But so being able to negotiate your own terms on the sale is such a benefit, and just cutting out that middleman, is greatly beneficial for both sides.
Absolutely. And then the best part is, you try to find something that is undervalued for the most part, so that you can refinance, for instance, you can pull out that money. So that's one of the biggest things that we do, especially with the BRRRR method, right? So are you primarily using the BRRRR, or what are some of your strategies that you use for your investing so far?
Yeah, so this year it's been, that's like the BRRRR strategy is my main focus. Absolutely. I did do some wholesaling this year, and I also did a flip this year. I wholesaled for 4 properties. 4 single family homes, and then I also did a flip on a single family home. I just sort of, like I said, 2020 was, January back before COVID was a thing, right? That was my mindset, is 2020 is going to be the year where I really scale up and I really learn every aspect, or in most aspects, of real estate. And so I just threw myself into a ton of different situations. I just like, I've never wholesaled before. And I came across a property. I was able to get it under contract for $85,000 and then turn around and wholesale it for a $20,000 wholesale fee. And that was my first ever wholesale. So, it was a huge win for me, because, that was a $20,000 pay, right?
Absolutely.
That I was actually able to take that $20,000 and use it on my duplex that I was at the time renovating and doing a BRRRR strategy on. So it's actually, you'll take the funds from a wholesale and you put it towards a BRRRR. And that's the glory of real estate. You can do so many different things in real estate. And I think that's where another thing that caught my ear in real estate was just the amount of different strategies you can do. In my day job, I do still work, every day, 40 hours a week. And I'm just bored, right? Where real estate is just, there's constantly new people to meet, new people to talk to, different things to learn all day, every day. Since, getting into real estate, it's been, every day. So it's one of those things I can't not stop thinking about.
Yeah, no, absolutely. And then the beauty of this is also, again, as investors, like we definitely need to make sure whatever property we purchase is, you got to think of multiple strategies, right? You guys have, if you go in there thinking, you know what, I'm going to just flip this house, and if you don't hit margins, what are you going to do then, right? You're essentially at a loss. So when analyzing properties, it's critical to have multiple exit strategies. So what I mean by that is, like you said, one could be, the BRRRR, so the buy, renovate, rent, refinance, and repeat method, which is very popular, and it is for a reason, because you can then pull out your cash and move on to next, properties. The other is the flipping, like you said. If you see something that you need quick cash, flipping could be a fantastic strategy. There's other things as well. Airbnb is another big one, when people just basically buy and hold and they put on short-term rentals. There's, of course, the long-term rentals, and then wholesaling. So for those that don't understand what wholesaling is, do you mind just kind of elaborating and giving us a little bit of definition of what that is exactly?
Yeah, so wholesaling is when you get a property under contract and turn around and sell the contract to another investor for a wholesale fee. I always like to keep enough meat on the bone for the next person as well. So I will, adjust my wholesale fee based on what I feel is suitable for that specific property. I've learned in the past, and maybe sometimes I don't charge enough, but that's okay, right? That's okay, because it's not a failure; it's a lesson, right? So, that's basically what a wholesale is, and it is it's a good way to get into the game, into the real estate investing game, to really raise some capital.
Yeah, so a recap. So basically, when you put something under contract, the benefit of this is you basically say, Ben, I'm buying this property. I need 30 days to close on it. Let's say January 30th. So till January 30th, when you have the assignment clause in there, what that allows you to do is you can sell that contract over to anybody. So I can purchase it from Ben. Ben is not going to close on it, so he doesn't have to worry about taking the mortgage. He doesn't have to worry about the finances. He's going to collect his $10,000 or $20,000 fee, and off he goes. He gets his pay. I get the benefit of purchasing a property undervalued the market, so I'm happy. He's happy. We both walk away from winning in the situation. So that's the beauty of wholesaling, and a lot of folks will talk about that, because under off-market deals are probably the best way of scaling and building portfolio, because really your win is when you purchase the property. It's not after. Sure, the after repair value is important, but you make the money on your buy, so that's very critical. So I'm glad that that you are sourcing. So let's get into a little bit about that, Ben. So how are you sourcing? I mean, are you handing out flyers, or do you have other online campaigns, or how are you getting these leads?
So I've done flyers. I've done multiple flyer campaigns in Sarnia. I've got signs up around the city as well, up on telephone poles and whatnot. And for sourcing out my multifamily properties, I'm actually, ones I'm really interested in, I will take that address to City Hall, find out where the taxes are mailed to, and I'll mail that person directly with the typed letter stating I'm looking to purchase property, and if you're looking to sell, I'm your guy. Let's make a deal, right? So it's as simple as that. That's a very powerful strategy for anybody looking to do that. Is don't talk to the tenants. The tenants don't care. They don't want you to buy that property. You know what I mean? If you can source out, find out who owns that specific property that you're looking at, and mail that person directly, or get their phone number. That's the way to do it. That's a very powerful way. That way you're right in front of the owner, right? That's where you want to be.
Absolutely.
Yeah. I've even there was a for rent sign out in front of a building the one time. I called the for rent sign acting like I was a tenant looking to move in, and we set up a time to meet and all this stuff. And I walked through the place like I was interested in moving in. And then basically at the end of it, I said, "Oh, well, by the way, I'm interested in this unit, but I'm also interested in all the units." And she's just sort of scratched her head. I said, "Yeah, I want to buy the whole place." And so she's like, "Oh, it's one of you people again."
Oh, okay. So she wasn't looking to sell, it sounds like.
No, she just likes to hang on to her stuff. She said, she goes, "Once I get something, I hang on to it as long as I can." So
Right.
I have her phone number still. I still call her phone number once in a while, leave a message. She never picks up, but I always leave a message anyways. And at least she hears my voice and she knows I'm still interested. So
yeah, and see, you're onto something. And then folks that are especially that are in the sales industry will understand that you have to have multiple points of contact. Just me talking to Ben today and then not talking to a year is not going to benefit anybody, because guess what? He talks to a million people a day. Yeah. And you have to be top of mind at all times. So it's absolutely critical. Like, stay in touch with these folks. Drop them a quick text if you don't want to be on the phone 24 hours. We totally understand. We're all busy. Send a mail. Send a quick Merry Christmas card. Whatever it may be. Something to stay in touch, because you got to be. If you're not top of mind, they're gonna forget about you, right? So. And I'm sure, like many other wholesalers, like you also provide referral fees. So that could be another good incentive, so that individuals that may perhaps come across a building, or they know a friend of theirs that are thinking of selling, they are going to call you first, because you build that relationship with them over the years, or over the time known each other, and they are getting something out of it at the end of the day. So there's some incentive for them to approach you.
Yeah, and actually this year, I think. Well, out of the 4 that I wholesaled, one of them was through a flyer campaign. The other 3 were word of mouth.
There you go.
Yeah, just people knowing that I buy property and stuff like that, and then they contact me, and a lot of them have actually contacted me, a few of them, and didn't even realize I offered a referral fee. And so when they're calling, or when they're talking to me, and they're telling me about this property, and I'd be like, "Oh, by the way, if I do close on this property, I give you $1,000 referral fee." And they're just like, "What?" And their jaw drops. And I'm like, "Yeah, that's how I do it." Like everyone, and I explained to them how it all works, and they're like, "Oh, that's really cool. Thank you so much." Right. So, and that entices them to keep calling you, and like you said, top of mind. Right. So, you hand somebody $1,000, they're going to remember you for the next one. So,
absolutely. So have you also done some door knocking as well, or is this kind of like what you've been doing so far, more on the mail campaign directly to the owners?
Yeah. So I did 1 day of door knocking, and it wasn't my favorite thing to do. So it's one of those things I've yet to do again. I see a lot of other people doing it, and all the power to them. If you find a good deal, call me. Maybe I'll buy it from you. But as far as doing it myself, I'd rather not. I do like the flyer campaigns. In Sarnia, there's so many there's a lot of wholesalers right now. A lot of people looking at Sarnia. So the wholesale letters are flying everywhere. Like, people that I work with know that I'm getting into this industry. So it's funny how many times I sit down at work and somebody comes over with somebody else's flyer, and they're like, "Oh, do you know this guy?" I'm like, "Oh yeah, I know him." "Oh, do you know him?" "Yeah, I know him."
Yeah, no, for sure. The whole investment world is getting bigger. It's becoming a little bit more mainstream, because social media has made it so much more simpler to pass on information and to educate and to learn. So absolutely, I do hear that. I know some wholesalers as well. That's the common complaint. They said it's like everybody's a wholesaler nowadays. So people are getting bombarded, but again, you have to be smart, right? Like, you figured out a great strategy where you kind of getting rid of all the mess, going straight directly to the owners, right? Because as a tenant, if I'm living in a property, I'm probably getting bombarded by like 40 flyers a week. Like, well, guess what I'm going to do? I'm going to toss that right in the trash, right? It's kind of like, those other flyers that we usually get, I honestly don't even look at them. I literally toss them in the trash, because there's no incentive there for me. Sure. Yeah. And then, like you said, a lot of the tenants are also afraid, if they introduce you to the landlord, they're afraid that they may lose the place, or they may have to be evicted and whatnot. So there's a lot of, fear around that. So definitely, I love your approach there. So speaking of which, Ben, how many properties are you on right now? How many do you have right now? How many are you holding?
Yeah, so I've got 5 right now. 2 of them are with JV partners. Those are the two duplexes I closed earlier this year, and I'm closing on my 6th property in January 31st. So
Beautiful.
Yeah, so I'm up to 12 doors right now, and I'll be closing on 13 and 14th in January. So that majority of that has all happened. Other than one of those doors has happened has been this from this year. So.
Awesome. And are you going through private lending for these, or are you going through conventional lending?
So good question. That one was a good. So yeah, so the first one, yeah, it was private. The second 2 were private. The 4th one was private. Yeah, so a lot of private lending. One of the best stories I've got from this year was, again, going back to those 2 duplexes that I was closing on with my GV partner. I was working with their mortgage broker, and this really has to do with doing your homework and due diligence on the person, the mortgage broker you're working with. I was working with this mortgage broker. He told me right from the day one that, yeah, there should be no issues with you getting the mortgages for these properties. I said, fantastic. Let's get the paperwork rolling, right? Mm-hmm. So basically at the point there, like, I was giving him so much paperwork. Like, I figured the next thing he needed was my oldest child. I'm just like, how much more information do you need, right? And I kept asking him, am I getting the mortgages? Because I mean, every time there's like, am I getting these mortgages? Why do you need this? Well, they just want to make sure. I'm like, well, am I getting the mortgages? I kept asking that over and over and over again. 6 days before closing, he calls me and says, Ben, you didn't get the mortgages. So I said, excuse me, you told me right for the last 3-4 weeks that I was getting these mortgages, and what happened? Wow. And he listed a bunch of excuses, right? So I said, you know what, just cease all work. Just stop. Just please stop. So anyway, so I had actually called, I called one private lender that I knew, and I told him the story about what happened, what was going on and stuff like that. And I said, I need $348,000 to close on these properties on Friday. And he's like, he just sort of chuckled, right? I'm like, he goes, let me see what I can do. So we ended up, he had $345,000 available. So I called. So after I had called or talked to the mortgage broker, I called the seller and I said, by the way, this is what's going on with the mortgage broker. He told me I was getting the mortgages and now I'm not. And he goes, and the seller says, what are you going to do? I said, well, either way, we're closing on these properties on Friday. He goes, how are you going to do it? I said, leave it with me. I'll get back to you. 12 hours later, I called him. I said, yeah, I got the money. We're closing on Friday. And he was beside himself. He said, how did you do it? I said, I don't know, man. Stress just it makes you do weird things. And it worked for me. And we were able to pull through and close on those properties using private money within closing. So.
And that speaks, highly of having a network, right? So you knew these individuals beforehand, right? So that's another thing that a lot of folks need to understand. You need to have a network. Your net worth is your network. Can't even express that anymore, right? So knowing these individuals, you were able to, allocate and get that and within the next 12 hours, which is unheard of, right? Had you not known anybody, you would have been scrambling. You probably would have had to let go and probably potentially even lose your deposit, right? So earlier you spoke about that too. So you were telling people, oh, you know what, I'm an investor. I'm looking to purchase. So then that's giving you referrals, and a big part of also. Getting coached. I'm sure you're also being introduced to other folks that are investors in the area, right? So, you mentioned you had some JVs. So, some of the struggles that we have as investors is attracting JV partners. So, how are you able to find partners who are willing to go on with you on these couple of properties?
So it was tough. Again, going back, this is like, so these 2 duplexes I got with the JV partner, I got under contract. Again, just before COVID was a thing, right? Mm-hmm. So I got them under contract, and then that was the next thing, is to start finding JV partners. By that time, COVID was, ramping up to be become this big issue,
Mm-hmm.
and people were uncertain. They figured it was like back in 2008 when everything just crumbled, like the real estate market just crumbled.
Right.
So everyone was tightening up their their wallets. Everyone was sitting back and just seeing what was going to happen. And so I would go for a little while trying to find a JV partner, and I confronted a few people, and it was the same thing, right, over and over and over again. And it doesn't, I don't know, I'm not sure. I don't think that's going to work for me. It's just like, here I am new to JVs. Like, this is my first time ever trying to do a JV with a person.
Right.
And trying to sell these deals to these people during COVID. And like, so anyways, and you talked about your network, right? Well, through my network, two people were having a conversation, and one person brought up my name to the other person. Well, that person ended up calling me and wanting to chat about Sarnia and investing in Sarnia. So this gentleman called me, hadn't heard of him before, hadn't talked to him before. Him and I chatted the one day, and he says, he said, I'm looking to deploy some capital in Sarnia. Do you know of anybody that's got any deals? And I'm like, right here. He goes, well, I said, I've got 2 duplexes right now that I've got under contract, and I'm looking for a JV partner. What for? Right. He asked me how much I needed, and he's like, that's pretty much exactly what I've got. Perfect. So it worked out really well. And then from that point there, he had already been investing in real estate for 10 plus years. So he really understood the game. Mm-hmm. And I think that was one of the biggest benefits I had working with him, was because he'd been real estate investing already for 10 plus years. He understood JV partnerships. He knew how to write up the contracts and the agreements and stuff like that. So it was literally just a matter of him cutting and pasting and being like, this is what I've done in the past. If it works for you, it works for me. And I went over it, and it was everything split 50-50, and it works really well. So it's been great. So
that's awesome. No, that's awesome. It's exactly what it is, right? Like to your point, you kind of have to still vet who you're going to JV with. I mean, folks that have kind of JV'd blindly with different people, a lot of them kind of regret it, for the lack of a better word. And the reason for that is because you guys have to be on the same page, right? So the terms have to be clear. You have to really outline what the responsibilities of each of the investors will be. So to your earlier example, some of them may be passive, where they kind of just being the money partner, and the other one is taking over the renovations, the tenants, the management. That's all handled through them. So they need, for you to have a clear understanding of your roles, they do clearly have to be defined in your GV agreement. Would you agree?
Oh, absolutely, 100%. Like, for my partner, it works out well for him because the properties are here in Sarnia. Mm-hmm. That's where I live. And that's where I do all my investing. He's from Brampton, right? So he's 2.5 hours away, mm-hmm. and he's not going to come and help me out. No. That's his job, is just to sit back, relax, have fun,
right?
Do all the dirty work. And like I said, there's been some dirty work with these properties because we inherited some colorful tenants. We'll call them colorful. They're a different breed, but it is what it is, right? But at the end of the day, we've profited already from these properties without even doing anything to them.
Wow.
Just based on the market appreciation from the beginning of COVID to what's happened throughout this year, the market hasn't done anything but go up all year long. So we've been able to benefit from that. It's been great.
Yeah, just a quick stat for everybody. Like, looking at the market, everybody was expecting a crash. It has not crashed at all. In fact, it's gone up other way. So just in Sarnia alone, just to throw a stat in there, looking at sales from November 2019 to November 2020 was the last time I checked, it's gone up by 20%. Just let that sink in. 20%. For you doing absolutely nothing, your house is appreciated about that much. It's insane, and we don't know what's going to happen. Nobody has a way to predict it, but in my opinion, it's not sustainable at this growth, at this pace. But for those that did take the leap of faith and invested instead of saving it and letting the inflation take over, they have profited significantly. So you just have to be smart. You have to do your homework. You have to know the market. So for him, it was for your partner, it was also smart because him being in the GTA, I'm sure he doesn't know much about the markets and what's going on in Sarnia. So by approaching somebody who's a local or who has multiple properties, I'm sure, Ben, you know where to invest and where to not invest, right? Whereas other folks blindly just buy and then they have to learn the hard way.
Yeah, that's the big thing, right? Like I've talked to other investors that have told me about where they've purchased a house or a property in Sarnia, and you don't want to burst their bubble, but you're just like, ooh. Yeah, you know what I mean? It's like, okay, well, I mean, it'll be fine, but just don't expect the best tenants, right? So,
yes, absolutely.
It is, it is what it is, but there are Sarnia is a bit of a weird area because I mean there'll be a street known as a bad street, but the one end of it's actually a really good end. You just got to stay towards that end of the street. Where if you do end up on the other end of that street, you're going to end up with a different type of tenant. But it's got its little pockets of good and bad and whatnot. But for the most part, I don't think you can go wrong no matter where you buy in Sarnia, as long as the price is right. When it comes down to it, just do your homework, do your due diligence, and go from there.
Absolutely. And then one of the things that we struggle with and what we look forward to making sure we do it properly is tenant screening. So let's talk a little bit about tenant screening because there's all sorts of individuals in all different cities. You got your good and your bad, right? So for your property, since you're sitting at quite a bit of unit number right now, how do you handle a tenant screening? What are some of your processes there?
So with the tenant screen in there, obviously, I look for employment, good credit ratings, obviously, right, and whatnot. I do like the younger responsible crowd. I mean, obviously, I do like the younger responsible crowd because they're more apt to move out and move on sooner, right? Than say somebody in their 30s or 40s, or in their 50s. They're looking for somewhere to stick and stay, which is okay if that's what you're into, but I'm like 2, 3, 4 years tops, move on, refresh the unit, get the rents back up where they should be and whatnot. So there are a lot of, like, the tenant profile in Sarnia is not that bad. Like there are, of course, there's always the riffraff, right? You got to just sift through that.
Right.
I've landed some really good tenants. Any tenant that I've ever chose has been a great tenant. I've never had an issue with any of them. Others that I've inherited, that seems to be where the problem lies, right? Those inherited tenants, right? Because I think a lot of other less savvy investors, they can't stand seeing their unit empty, right? They just got to get somebody in there, just hoping so that person will pay the rent. Where I'm more like, I'm going to do my homework, and even if it's got to stay empty for an extra couple weeks, just to make sure I get that solid tenant, that's what I'll do, right? So
absolutely.
And it's paid off, right? Because I mean, like I've never had an issue with any of my tenants I've chosen myself.
Yeah, no, that's a very good point. Yeah, individuals should not get desperate and try to fill the unit as soon as possible, because guess what? Someone could come in and pay you top dollars, but then you're going to get calls every single day. Oh, this is broken. This happened. There could be domestic violence going on. The cops are calling you. So believe me, you have to be selective. You'd rather have it, sit there empty for even 2 months, and then just to give it away. And one of the things that I'm sure you did this as well is that I always put that in my calculations. When I purchase a property, vacancy is always included. So vacancy and holding costs. I think that's a very important factor a lot of folks tend to forget, is that you can't, ideally you would want to get a tenant at the very first day that it's like renovated, let's say. But again, do you want to just risk it and give it to anybody, or would you rather be selective and pick the cream of the crop? I'd rather the other way around, because like you said, it will pay off. Another thing you mentioned also is basically what you're trying to say was it's good to have a bit of a healthy tenant turnover. Yeah. And the reason for that is because every single year, as we know, especially in Sarnia, market rents have skyrocketed. So for you to charge top dollars and keep the place renovated, the tenant turnover is fantastic.
Yeah. Yeah, and I think a lot of it too is once you get your name out there as being a good landlord, like even just in the last year or so, you can now, like I've got a couple of units that are coming vacant in the next few months. I go to my tenants and be like, hey, do you know of anybody that's looking for a place to stay? I'll kick a little bit of money back to that tenant for helping me find somebody, right?
Right.
Because it just saves me a lot of hassle. I got 2 texts yesterday from 2 different people looking for a place, right? From, because they knew one of my other tenants.
Right.
So yeah, even creating that
referral system.
referral system, yeah, just creating that, it just helps you out so much more in the long run. So I like I said, it saves me time. And what's $100 for them to be like, hey, here's a person, if they fit the profile, perfect. If not, unfortunately, they don't. So I just move on, right? So.
Right. So do you have do you typically just screen them on the phone, you speak to them, or do you have a form you send them out to kind of fill out an application beforehand? Do you do any sort of background checks? What are the ways that you kind of look into making sure you're screening them properly?
Yeah, so I do have a application they have to fill out with their social insurance number. They sign off stating that I'm allowed to go look at their credit rating to make sure that they have decent credit. If they have a job, who's your boss? I'd like to talk to your boss. How long you've been working, where you are and stuff like that, right? And yeah, so it's pretty simple. It's just you got to make sure if you can check that credit rating, make sure they have a job, make sure they're responsible. That speaks volumes there.
Awesome. No, it's fantastic. And Ben, yeah, if you don't mind sharing with us perhaps one of your deals that you had. I mean, especially the ones that you kind of bird, high level numbers. If you can maybe take a case study. Would love to hear perhaps one of the projects you took over, and to walk us through and how that worked out for you.
Yeah, so my first purchase was a semi-detached. I'll go with that one, and so I purchased it last year for $185,000. I got about $15,000 into the renovation. The backyard was a disaster. Like, it wasn't even rentable in the way that it was. So I took on the yard work myself. I'm handy that way, and I don't mind getting my hands dirty and doing the hard work like that. But I was able to, basically we're $200,000 into it, and I just refinanced it this week for $272,000. So
wow.
So I was able to pull out quite a bit at, plus mortgage pay down and whatnot. I was able to pull out $53,000, and from that, with that money, I'm actually going to be using it to purchase my duplex that I'm closing January 31st. So
that's incredible. So, and then how much are you renting it for? Is it a buy hold or?
Yeah, that's buy and hold. I'm renting it for $1,575 right now, which is actually on the lower end as far as a 3-bedroom semi-detached home goes in Sarnia right now. But I've got really good tenants in there, and they're a young family and they're great people. So giving a deal to a family like that is always worth it as well.
Absolutely. So so win-win for everybody. Another thing I was going to say is it's a bit of a stigma for whatever reason, is people look bad on investors for some reason. I don't know if you got that as well. It's like, oh my God, you're going to buy this house, you're going to raise the value. But you know what? We're actually helping people build a community. We're gentrifying the area. We're rebuilding, especially in the older cities. I don't know about other cities specifically. Some cities give you a little bit of hard time in terms of permits and whatnot. Others are very open to it because they want investors to come in. They want to attract good tenants, people that are going to bring you jobs, build a community. So is that what's happening in Sarnia? Would you say is it Sarnia starting to gentrify a little bit?
Absolutely. So my in-laws have lived in Sarnia. They were from Sarnia right from I think they were born in Sarnia, right? So they've been here for 60-something years, right? They've seen
right.
So they've seen areas of Sarnia go from being good areas to bad areas to now turning around to becoming good areas again, because what's like you mentioned, house prices have gone up 20% in just a year. So a lot of those people that were buying houses in what we call the North End, where it's desirable to be living, are now those people can't afford to live in that area anymore. So they're actually moving back down towards central Sarnia, and turning those areas back around again, making them back turning them back into what they used to be back, 30 years ago. So it's really nice to see that. There's a lot of people are putting money back into their homes and really sprucing these streets back up. So I would say absolutely 100%.
Yeah, and speaking of which, I mean, I know Sarnia is pretty big on chemicals. There's a lot of it's actually known the chemical city. What are some major employers in that area? Because I know one of the things that we look for in a specific investment area is, of course, employment, right? So do you mind sharing a little bit about some of the industrial businesses that are, I guess, the big names, let's say, that are existing?
Yeah, so I'm right in the heart of that stuff, right? That's where I work every day. My regular work clothes are coveralls and a hard hat and safety glasses and big leather gloves and all that good stuff. So I can speak to this stuff quite fluidly. So we got about 5 major refineries in Sarnia, and then there's of course a bunch of little spin-off refineries as well that are connected to those other bigger ones. But right now, currently, we've got a huge multi-billion dollar project happening at Nova Chemicals right now, where they're actually expanding their plant and upgrading their home plant, or their mother plant, they call it. They're doing a ton of upgrades. There's other refineries as well, getting on board with that too, because Sarnia's the infrastructure is here for anybody from outside looking to build and invest into the chemical industry. Sarnia's got it all, and it's all here. You got the high pay jobs, right? The unions are big in Sarnia. They're all high paid construction jobs. There's a lot of people making good money in this town, and it reflects for sure.
And that's growth, right? Like job growth is huge, and that's what attracts folks to move in, right? So the city only gets bigger and bigger, and folks move in. So that's fantastic. I mean, those are one of the key criteria we all look into in an investment market. So that's fantastic here. And I know a lot of folks don't even realize, but Sarnia is one of my favorite places to visit during summertime. You guys have a beautiful waterfront. The Lambton Shores is right across, and then just up north. So I know specifically in the north, and I feel like there's a lot of short-term rentals as well that's currently happening.
Yeah, that I don't really know too much about the Airbnbs and stuff like that. I haven't looked much into it myself, but I do know there's a few out there, and they're killing it. So
absolutely. Yeah. So maybe that'll be something else you and I would be considering down there.
Absolutely, right? Just got to get that specific one that works. Will work for it. So
one last thing I want to touch base, which I love to do, and a lot of people don't really focus on, is failures. Right? We always talk about success, but nobody talks about failures, and failure is very important. So do you mind sharing me a failure story?
Yeah, I love this story. This is probably one of my favorite to tell. So I contacted my lawyer the one day, and I said, "Hey, when are we signing to close on this property?" It just went silent. He says, "What property?" I said, I told him the address, and he's like, "That's not closing for 2 more weeks." I'm like, and I sort of just did one of those. I'm like, "Did I not tell you I changed the closing date?" He's like, "You must not have." So that was probably one of the biggest mistakes I've made so far. Luckily, it wasn't affecting anybody. It wasn't deterring. It wasn't affecting anybody because I was dealing again with a private seller. Mm-hmm. That private seller was just selling that property to move in with her boyfriend, right? So it wasn't like I was wrecking anybody's purchase and sale. I had to go back to the seller and be like, "Guess we're not closing today." And then they're like, "Well, why not?" So I told them, and they're like, "Oh, okay." And I'm like, "We're closing next week if that's okay." And they're like, "Yeah, I guess that's fine, right?" But and then so anyways, I bought them a bunch of tacos, and they were fine with that after that.
Yeah. Oh wow. Well, so basically the mistake was you didn't tell them actually, like they forgot about it.
No, I mistakenly I forgot to tell my lawyer. I forgot to send him the amendment for the date change, and it just sort of ended up. Yeah, it was definitely not a good situation to be in, but a very good learning. Like I said, the seller wasn't holding up any other sales at that point, so It wasn't and they were really good. They were fine with it, so it worked out in the end. and everyone got what they wanted.
So yeah, this has been fantastic, Ben. I just wanted to ask you just a few more things that I want to kind of make this kind of customary towards all my guests coming on board. So I know you touched on it earlier, but besides Rich Dad and Poor Dad, which is everybody's favorite book, what are some of just name 2 other books that you think are very important for someone to starting off to read?
So besides Rich Dad Poor Dad, Think and Grow Rich by Napoleon Hill. That one spoke to me, spoke volumes to me. It just sort of helped, concrete, my thinking and be like, okay, it's okay to be obsessed over this kind of stuff because it helps you create the vision you're going for, right? So that one was a good one. The Compound Effect was another one, and The Slight Edge. Like that's another thing, as far as myself and my personal growth. Before I read Rich Dad Poor Dad, I hadn't read a book my adult life unless I was since college, right? So I was never a reader. I didn't enjoy reading. If I was going to read something and had to be for a reason, well, now I've got more than enough reasons to read a book, and I enjoy it because I know what I'm reading is actually I'm going to be able to implement that knowledge.
Yeah, no, absolutely. And I think that's the thing. Like we, as adults, we think once university or college is done, we think that's it. I'm just going to work, put my head down, go 9 to 5. But you know what? We constantly have to develop and grow ourselves. So one of the best ways to do that is through books. And I've read The Slight Edge as well. I'm actually, the other 2 you mentioned, they're actually sitting on my bookshelf. I need to get through. But The Slight Edge is fantastic book, highly recommended. And I think the biggest eye opener for a lot of folks, not just investors, is definitely Rich Dad Poor Dad. I don't know what it is about it. The way it's written, it just definitely resonates. So highly recommend starting with that, because then you understand the basics, like what assets are, what's liability, how does one go and become a millionaire versus another individual that's trying to keep up with the Jones. That's basically, in a nutshell, what the book really talks about.
Yeah. It's funny because in my day job, I work with all these guys, they're all making good money, but they're all going out and buying horrible things, we're depreciating assets where
absolutely
where I'm, they hear, and then they get bored of, they listen to me talk and they're bored. They just whatever, man, whatever. Right. So it's just no, but guys, you have to understand. So it's funny. It's for sure. And Rich Dad Poor Dad was a huge eye opener for me. Like you said, it just really showed you the difference between assets and liabilities, and the fact that your primary residence actually isn't an asset.
Yep.
It was a different way of looking at it, and it was huge eye opener for me.
Another question I want to ask is what's your favorite place to visit, to travel to?
I'm not a huge traveler, but we went up to Sabo Beach there. We're a camping family, right? So we went camping up there 2 years ago, and I fell in love with the place. That has become my end goal, is to eventually get a cottage up in Sabo Beach, up in that area, and that's going to be my primary retired residence. So I'm looking forward to that area. So we love going up there. My kids, even today when we were playing Pictionary,
right?
Daddy, we're going up to Sabo Beach. You said we were going to Sabo Beach. Are we going to Sabo Beach? I'm like, yeah, I guess we're going to Sabo Beach. So we'll make the 2.5 hour trek up the lake to Sabo Beach just for a little visit and turn around and come back.
Last question. What is your why? Why are you looking to invest? What do you want to get out of this? What's the end goal? I heard The Rock. He answered this one question, and he answered it very well. And he goes, his why is ever evolving. It's always evolving, right? My why changes all the time. Bottom line, though, it's for my kids, right? My kids are my number one. My family, my number one. I want to make sure that they're set up in a way that I was never set up as coming up, as a child, coming from a poor family. We were always the poor family in the school. I want my kids to, I'm not going to spoil them by any means. I tell them that all the time. I said, right, they're all going to have to work for everything that you want, but just know that I will be there to help and guide you and whatnot. Right. So at least,
I think my family is definitely my biggest why. And then and then being able to, retire early as well. Again, coming from the Ford family, if I ever wanted to buy anything myself, I had to go out and make my own money to pay for whatever I wanted to buy. So that early retirement for me would be nice. I've been a workhorse my whole life, and now I'm sort of on the. I'm going to be 40 in February, and I'm just sort of thinking like, okay, let's try to change the path here a little bit and go a different direction and see where it brings me. So I think real estate's going to bring me where I want to be, and I couldn't be happier. Absolutely.
No, you're definitely on the right path. Can't wait to hear where you're going to end up next year. The way you're trajecting it, yeah, I absolutely can see you doubling your portfolio.
Thank you. I do have a goal of, well, I got sort of two goals, depending on which way that goes. Either buy a property a month, or buy bigger properties, but fewer transactions, but bigger properties. So we'll see which path it goes. Either or, I'd be happy with either. So
that's awesome to hear. Well, thank you so much, Ben. This has been a very amazing episode. You gave us a lot of golden nuggets. That's what this whole podcast is about. I'm trying to get an understanding of what are the important aspects of real estate, things that we can share. So I'm hoping everybody listening and got lots of golden nuggets out of this. For folks that want to follow you or connect with you, how can they connect with you? Where can they find you?
I'm on Facebook, Ben Bergen, and then I'm also on Instagram, Ben Bergen 7414.
Perfect. I'll have your information down in the show notes for folks that want to connect with Ben. Again, if you're interested in Sarnia, definitely feel free to message Ben. He's a fantastic source, so he may have some deals lined up for you. You don't ever know.
That's right. That's great.
Awesome. Well, thank you so much for joining us, Ben, and thanks for everybody listening in. I will catch you on the next episode.
Thank you so much for tuning into today's episode. I hope you were able to get some great golden nuggets out of it. The kindest thing you could do is share this podcast across all social media to help as many people as possible. Your sharing of this content means everything. Thanks, and I'll see you on the next episode. Until next time, let's get it.